we're going to talk a little bit about the corporate VC perspective. We obviously have some folks here who actually are pretty active, and I think we'll have a lot to talk about. Maybe if you can kind of give us a brief introduction, what kind of your role is in venture capital and how you got there, and maybe one or two of the more interesting stories you've invested in recently or things that you're looking for. Christine, why don't you kick it off?
Thank you.
That works. So hi, Christine Herron from Intel Capital. I've been at Intel about 5 years, which is shocking to me. It's a very long time for a startup flavored person. But I started in venture actually in New York doing Series A investing with a firm called GeoCapital. You know, fast forward, worked with Pierre Omidyar and some of the investing on Omidyar Network, First Round Capital, which does all seed stage investing, and went to Intel to help them do more early stage, and also to help establish consumer internet practice, which is what I'm doing now, internet digital services, which, as you know, has a great deal of overlap into Intel products.
Maybe a few other points. How big is the fund that you're investing out of, which is really huge for Intel's perspective, and right. How much is that a VC structure or off-balance sheet structure?
Yeah, so there are a lot of ways to do it, obviously. Probably have a couple of different ways up on the panel. We invest straight off the balance sheet, which is both good and challenging. You know, there's pros and cons to every method. One of the nice things about investing directly from the balance sheet is we don't have a fund cycle where we're being driven by, oh, it's almost time to get a new fund, so quick, let's have an exit. We rather have a 10-year rolling IRR that we work from for performance. And when we make those investments, we're adding up now to about 1,500 over the past 25, 30 years or so. We've been investing a very long time. We're doing about 60 or so new investments each year on average. That's somewhere between 350 and 500 million per year, US dollars. I have to remember, not in the US. 350 to 500 million dollars that we're investing both in new and in follow-ons, which is very important if you are thinking about corporate investing, to remember that it's not just the first check. You have to have those other checks if you would like people to continue having you invest in these rounds. No one wants just a one-shot.
Great. Angus, can you give us a little background as well, and where, I guess, how you got into the business?
Sure. So I guess is this working? Hi. So yeah, I guess I'm the guy from the region on this corporate VC panel here. STC Ventures, as the name suggests, backed by Saudi Telecom, and we've been around for about sort of 3-ish years investing, 3 and a bit years. I've been in the region for 7 years. So prior to this, I was with 254, which is kind of one of the earlier venture investors in the region, quite active and remain active. Yeah, just to pick up on what you were talking about there, SEC went down the sort of independent fund approach. So it's not balance sheet investing; it's a fund. It's independent. It's managed by an external fund manager, RS Capital, which is a European headquartered VC that invests globally.
And Karthee, if you could give us a similar story.
I have a mic on. Yeah.
Sure.
So I part of Qualcomm Ventures. So we started investing 15, 16 years ago now. Started US, but now we have presence in almost all the major geographies. US, Europe, Israel, India, China, Korea, and recently Brazil. We are actively looking at newer ecosystems as well, and Middle East and Southeast Asia are probably the ones that we are actively looking at right now for a physical presence here. We invest out of the balance sheet. It gives the flexibility that you don't have any fund cycle pressure, so you can invest as many as you want or as little as you want. So I joined 10 years ago, started in the US in San Diego, so invested a few years in the US, and at that time we had very little presence outside of maybe US, Europe, and China, that's it, and started the India ecosystem. It was 2006. I also started the Israeli ecosystem as well. Probably wanted to look at some deep technologies at that time, so Israel gave that indulgence. So since then, we invested in Waze. I invested in Waze, which got bought by Google. Now we have a full team in Israel. I pretty much run the India ecosystem now, and we can talk more about some of the challenges with corporate investing and also some of the benefits that we can bring to the startups as well.
Great. You folks cover a good bit of the world, at least we've kind of got US represented, Middle East, and maybe India, and I know you're also doing stuff in many other places. I'm interested to hear about Brazil because I was just there, and some of the macro picture in Brazil is not that positive, but it's great to see that corporates maybe have a longer horizon than just the current macro picture. Yes. So how do you folks think about investment thesis? And maybe if you could characterize that as what's different about a corporate investment thesis than a traditional venture capital?
It's harder.
Okay. Why is it harder?
So number one, it's harder because if you're in a typical venture firm, which I've also been, as you know, you're there to make money, and you have some mandate that you presented to LPs.
So does that mean as a corporate VC, you're
Yes.
not interested in making money?
We are interested in making money, so it's the double hit, so you have to still make money, and in fact, it's a bit worse, and I assume it's similar for you, I'm not sure about you, but we get compared not only to top quartile venture returns, we're also getting compared to the return on R&D spend, which is much higher than the typical venture capital return. So we need to hit, some mark that's in the middle in order for, our board to continue to be happy and continue to want investing in companies. But then you have the strategic imperative, which then becomes, for us, the way we think about our thesis is there's this continuum of, on one extreme, very, very aligned and it's business unit supported, and this is something where Intel might have some commercial relationship, it's gap fill in our technology platform, perhaps something that we'd like to distribute, or it's a good reference design for our platforms as well. And then sort of in the center, it's ecosystem, so it's business unit aligned. And this might be, for example, we've done many investments in gaming because gaming drives a lot of compute. We like mobile investments because mobile drives a lot of compute. 96% of the data center market, keep it up. So we like that. And then there's eyes and ears, which is, it's disruptive, but it hasn't really taken hold yet. It's not something big and meaty enough where we have a business, we have a business unit that's dedicated to products for that market, but we should be aware of it because, and this is where it's a little more Intel capital driven than business unit driven, that's where we're supposed to be the trend spotter. We're supposed to see that something very exciting is about to take place.
Yeah, I'd say it's it's complex. I work for the fund manager, so obviously my interests are more on the financial driven side than elsewhere, but obviously we're always trying to balance our objectives against the objectives of our LP, SDC. So they've got a mixed range of objectives. It's access to innovation. It's access to sort of preferred partnerships and synergies with investee companies. It's a little bit of CSR, particularly for investments that might be closer to home, Saudi-based, and some form of financial component as well. They're not in the business of charity. They're there to make some money too.
I think we're focused around ecosystem development. I think that was the one thing that we probably discussed quite a bit about, and then said, okay, we're going to focus on ecosystem development. Obviously, the ecosystem that we know is connected ecosystem with mobile or mobile internet. Within that, there are companies where we actually work very closely with. There are companies probably we work a little bit arm's length with, but we kind of keep that part flexible and then focus still around returning money as well, because that makes the corporate leave us alone as well a little bit. So, but in the high level, at the corporate level, we are a corporate group reporting to the C-level suite and then focused around ecosystem development.
So as corporate investors, I'm guessing all of you have a lot more going on than just the investments that you're doing or even the returns on the investment you're doing. There's probably a spectrum of activities that might be involving partnering with companies, acquiring companies, investing in different stages in companies. How do you evaluate kind of that entire spectrum, and how do you balance that against your own very specific investment activity? And maybe let's start from the opposite side, and Karthee, if you can talk about that.
So my focus is investment, not M&A. So, and we also do not invest for M&A either. But we do look at a lot of companies, and we kind of work with the M&A group because we see a lot more companies. So a lot of times we take them to the M&A group. In terms of partnering, there's another rule as well. For every 100 companies, we probably invest in one. Every 100 companies we see, invest in one. That doesn't mean they are bad. And the rough rule of thumb we have seen is that out of the 100, probably 10 are actually pretty good that you want to work with. And a lot of times we enable partnership for them, whether close partnership in terms of with our business units and whatnot.
Is that more of the filter for how you get started in looking at the investments? Are you looking for partner opportunities when you're investing, or as part of that?
No, that is not a focus, but I think it ends up being that way. There's at least 10 companies that out of the 100 that we see that Qualcomm could benefit in terms of working together. So we kind of facilitate that as well. So there's a lot of working with the inside groups as well. So 1/3 of my time is spent on working within Qualcomm in terms of connecting these groups, also understanding what they are looking at as well, and then also facilitating help for our own portfolio companies. So 1/3 will be for working within Qualcomm, 1/3 will be focusing on your own portfolio companies, and 1/3 will be probably looking at newer companies for investment. So that's the.
Have you ever had a situation where you want the company to get a next round and internally Qualcomm was thinking about acquiring it? Are you in any kind of conflict there where, you know, the company might want to acquire that startup at a cheaper level, you as an investor might want to see it get to a larger level before it gets acquired?
So when we invest, we kind of take a look at it very actively, that if this is going to run into Qualcomm at some point, we do not actually invest. But it ends up happening because, you know, technology keeps changing, Qualcomm keeps changing, everybody keeps changing as well, startups keep changing as well. So we have, 250 plus companies that we have invested, we have acquired 2. So it's a small percentage, and it does get into a little bit of complications, but we try to excuse ourselves a little bit as well in terms of not being in the conflict. It is a little bit hard as well, which is one of the reasons we have been staying away from invest to acquire. I think you don't know where you are aligned. Are you aligned with the corporate, or are you aligned with the company because you're on the board? But we try to manage that as well. So.
Angus, what about a slightly different perspective? What if you're an investor in a company and one of your competitors wants to acquire the company? How do you handle that scenario?
Not a problem. Like I said, sort of, you know, my primary objective is financial, you know, return. So, you know, if you know, nothing stops SEC outbidding that potential competitor. You know.
So that's completely fine. No,
it's completely
Chinese
fine.
wall there. You're not trying to help influence.
Complete Chinese walls, absolutely. I mean, obviously, there's a level of kind of, you know, reporting responsibility back to SEC on a periodic basis, but you know, they see the top line information, the companies, you know, operate independently. We operate independently, and if a company, you know, wants to exit, you know, we're going to help that company get the best exit possible. And if we can get that from SEC, well, that's a win-win for everyone. But you know, there would be a complete level playing field sort of, you know, auction. Just to answer your sort of earlier question that you mentioned, you know, we look at investments through the same lens as any VC. So it's kind of, you know, great teams, great products, you know, solving big problems, great potential markets, you know, great traction. But always there's a kind of, you know, we think about, you know, potential synergies, you know, back to SEC, and that obviously sort of, you know, helps make the investment committee, you know, discussions and decision making much easier for us if we can kind of present a solid kind of synergies case. It's up to the telco, it's up to SEC whether they actually want to kind of, you know, make those synergies happen. And you know, I won't lie, it takes a while, you know, to do anything with a telco, but where it does happen, it can be very powerful. A bunch of people today have mentioned Kareem. We were the first investor, or first institutional investor in Kareem, and it continues to back the company through sort of Series A, Series B, Series C. And you know, we've helped that company partner with SEC, and it's done great things for the company in Saudi, obviously the biggest market.
Christine, Intel is definitely a huge organization and many different facets of that organization. How do you manage and or deal with different departmental interests or organizational interests in the investing activity?
Yeah, and I won't lie, that is a challenge sometimes. Sometimes it's easier to do the eyes and ears deals because no one cares about it yet, so no one can get worked up about, you know, it's mine, no, it's mine, or wait, no, we might go into the market. You know, you don't. Those are challenging conversations to have. You know, I think sort of there's this theme in here about, you know, would folks want to come in? Do you want to acquire? Is it competitive with Intel? Does it become competitive with the product we later develop that's not there at the time of investment? You know, because these are very long-term investments, right? A venture investment's going to be at least 7 years, presuming it grows up to be a nice, successful company. So typically what ends up happening is you have some champion in a business unit if it is strategic, if it's one of those more strategic investments. And there's some alignment that's either very general, in which case you don't have that issue. Interestingly, the more strategic it is to the corporation, the more challenging it might be to manage some of those tensions between, you know, which is the master, you know, which group is going to be primary for engagement with this company, particularly if it's a small company. You know, so there's a company I invested in called Elocart, which actually is a 500 company as well. And we went through this very challenging issue where we made the investment. It was eyes and ears because we weren't doing a lot. This is tablets and restaurants. We weren't doing a lot in that vertical yet. We were thinking of it as compared to mobile devices. We're like, it's not that many. It's only, how many can there be? It's not one-to-one. It's not consumer. And then later we realized, actually that vertical hospitality is quite interesting for the tablet market. Let's go spend some more time. And when we did that, and got a little bit of focus from the CEO at Intel, and then all of a sudden, everywhere there's this interest. I have interest from folks in Western Europe, wanting to know about, when's it going to be ready for distribution in Europe? When's it going to be compliant with some of the standards there? I have interest from, hey, can we put it in the, we need X units to put into the demo pool from the sales organization. And meanwhile, this company has 40 people, of which 2 were business people. So. And I had literally inquiries from more people across Intel than this company actually had staff, right? So what do you do with that? I mean, that's the rich man's version of this problem, not the poor man's version of this problem. But it goes both ways. And so it was this interesting tension of trying to say, okay, where's the most value going to be derived by Intel in mapping that to, well, what does the company actually need the most from us? Because that might not be the exact same place in the Venn diagram. And sort of my job as the investor is I do have to look out for Intel's strategic interests, but fundamentally, it's up to I need to help that company grow. And Intel benefits by the larger and more successful that company becomes, as well as any other investment, which is, I think, to your point about acquisitions. We tend to not invest for acquisitions. I recently asked our legal department, because someone asked me if we had ever done ROFRs, rights of first refusal, and our legal department couldn't find any investment out of those 1,100 where we had done that, because it's such a bad practice for corporate investing. Not only because you don't get, syndicate partners, you don't have other folks wanting to invest, competitive or otherwise. I mean, and we have co-invested several times. But also, if you're looking for an acquisition, it's cheaper to acquire it when it's small. So you don't want to invest in it, grow, make it, bigger if because I have more distribution in Intel than a founder of some tiny company. So if it's a great platform, let's buy it and distribute it. So they tend to be different things to want to do.
Right. I think one thing that's interesting about looking at the corporate investor market, certainly, us as a Silicon Valley investor that's primarily driven by financial returns, we don't see a lot of other Silicon Valley investors in emerging markets. There's a lot of folks in Silicon Valley who feel like there's plenty of opportunities in a 30-mile radius between, say, San Francisco and San Jose, and maybe a few other geographies like New York and LA, perhaps Boston and Seattle. But what's interesting, I think, is because of the strategic focus of a lot of corporates and the longer-term horizon of emerging markets, there's probably more propensity to invest in emerging markets from corporates than maybe traditional, Series B and even Series C Silicon Valley investors, at least until you get to a large area. How do you folks look at the emerging market, and in particular the MENA region, where some of you I think are active? I'm not sure what Qualcomm and Intel are doing in the area, but is this now an interesting region? Has that changed in your view? And if it's not, or if you're looking at Brazil or India or other areas, like what's the metric for when things get interesting?
I can start. So we went through the same thing with India as well. We came in 2006 when India also had similar things. So we are here for the longer term as a corporate, no fund cycle and things like that. So we're focused on the longer term, so we can do some of these things probably a little easier than maybe a regular venture fund. So when we looked at what we wanted to look at was, is there support across the ecosystem? I think across the levels of the ecosystem and across the ecosystem. I think that's the one part, that you can get a lot of early stage capital very quickly, but then if there's no support at Series A or Series B, then the companies are going to go sideways, right? So what we look for is there enough of those ecosystems, at least starting to happen is one of the things that we look at. So when we looked at India, for example, once a company reaches a scale, there was actually enough money there at that time, 2006. But there was very little money at seed, especially for product companies. So even if you go to an angel investor, the first question they ask is, tell me your revenue. So you're not doing product company at that stage. You're doing mostly services company where you can get revenue. So we felt that is, at least fillable. So we felt that, okay, this is the time to go in, and we did QPrice, which is the early stage investment program, mainly to address that as well. I think since then, all the other parts have now come into place as well. So when we look at the geography, that's one of the things that we look at, because if you want to build big companies that will have impact, you need to have support across the ecosystem, and at least we want to see some signs of it. Brazil, we saw that sign maybe 3-4 years ago, even though people have been investing longer, but 4 years ago we went into Brazil. I think Southeast Asia and Middle East, I think I'm starting to see that as well. We haven't made a decision yet, but I think that's the support across the ecosystem is probably what I would look at. Because otherwise you do one thing and then it just gets stuck there.
Yeah, that's similar. I mean, we do about half of our investing outside the U.S., which I don't know if everyone knows. So, and that's both in terms of the dollars that we put to work and in terms of the raw number of investments that we're making. That tends to be in areas where we're looking to develop the market further, areas where we are seeing some critical mass of startups, and there's an ecosystem developing. So I think, again, similarly, more investments in India, more investments in China over the last few years than before that. As far as this region goes, this is certainly an emerging market in many, many ways for Intel and for Intel Capital. I think where you have the power of the global brands that are doing investing to come into a new space like this. But what you also have, I think, with some of the global brands is there are these huge concerns about how do we manage, liability, and how do we manage intellectual property. So I know, for example, certain areas in the region where it's not the same level of export compliance or the same level of trade, agreement. It's a little harder for us to invest because we have to worry about how that affects, the broader corporation. But I think when you do have, things chugging along in a very organized fashion, then yes, that's going to be a time when we do like to invest.
Angus, you have perhaps a more specific focus around the MENA region, and what do you see as kind of opportunities and risks that are really interesting in driving activity here?
I mean, I echoing sort of what Danny said. You can take two approaches, which is one sort of identify particular vertical sub-verticals that you like from an investment thesis point of view, and deep dive into those, or two, sort of react or be more reactive to kind of good entrepreneurs and good ideas that come forward. I think we sort of take the latter approach. I don't think the ecosystem in terms of startups and entrepreneurs is sufficiently kind of broad and diverse and developed to kind of be able to kind of cherry pick the top 1 out of 10 companies within a specific sort of vertical. So yeah, we're a bit more reactive. We don't purely look at MENA, by the way. We do cast the net a bit further afield, particularly for kind of companies that are of particular interest to STC and the telco. So we've made sort of 2 or 3 investments internationally as well. Mobile remittance, sponsored data, things that are very relevant to telco.
We're going to wrap up maybe with just one last question. I guess if you had to kind of pick 2 areas that you think are, one's kind of bread and butter investing that you've been doing a lot, and then one that's kind of an over the horizon technology that might be riskier or that you think has potential. Give me sort of what's the today sort of vertical that you go to kind of make sure that you're making money and opportunity, and what's the thing over the horizon that excites you? You have to tell me what the easy one is that's the bread and butter, and while you're thinking about the one that's over the horizon.
All right, I'll go because no one wants to take the risky bet. So I think for us, bread and butter right now is anything that's marrying digital services to a device. So Internet of Things, wearables, digital experiences that may or may not have a device involved. Going back again to which investments are fun or interesting lately, we did this company called 2-Bit Circus, which does immersive.
2-Bit Circus?
2-Bit Circus. I am an investor in a circus. I never saw it. I would get to do this. But basically what they do is immersive entertainment. So if you were going to start the Walt Disney Company today, it would be this company, right? So it's interesting because on the one hand, it's a sweet spot for us because it's marrying digital services and devices. But on the other hand, it's like this new space, which is, okay, you have all this new product. What else is going to change? And so I think that's the bet, which is where are these other areas are going to change now that everyone's got little things hanging off of them.
Okay, I'll go next. I'll just focus around India and maybe the emerging markets that I see, not necessarily our US guys. I think what we are bread and butter would be just using mobile as a platform for every vertical out there, from healthcare, education, retail, everything. that's what I'm seeing, and that's probably the bread and butter. I think in the longer term, or in what would happen to India maybe 5 years from now would be that I think it goes in a cycle. You go through building hardware platforms, and then you actually harness it by building a bunch of services on top of it. Then you go to the next platform. I think India probably is not participating in that yet. That the building of this new platform. I think given that the world is getting shrunk and then everybody has access to everything, I think what I would say is that the next hardware platform, whether it is the robots or whether it is drones or whether it is AR, VR, whatever the next one is, I think India will participate in that, and India will probably be one of the important players there as well. I think that would be my long-term bet.
Angus?
Maybe not the best qualified to talk about kind of the future of tech, coming from the region. It's a bit more about sort of, I wouldn't say clones, but sort of, more traditional business models here. But I'll give you an example of a company that we're invested in that has both a nice bread and butter business, but also has a nice of the future and something kind of, pretty interesting. Transfer2, which is based in Singapore, it's one of the world leaders in mobile airtime remittance. So that's a very simple product whereby, if you're a migrant worker, you want to send some value back to your friends and family back home, you can, do it by your handset in the form of airtime credits. Airtime being a sort of a very useful form of currency, which is useful to everyone around the world. Everyone's got a handset, right? So that's a nice bread and butter business, which they're one of the global leaders, and that's growing very nicely. But kind of looking ahead to the kind of next sort of set of products, which could be interesting, sort of leveraging the relationships I've got with hundreds of operators in 100 odd countries around the world. So looking at things like creating a mobile money hub, which connects digital wallets in different parts of the world, so allowing people to send money into those digital wallets, different digital wallets to talk to each other and send money across each other. So it works great within a country, say M-Pesa, but it hasn't worked so well internationally. So that's a sort of a new area they're getting into, which we see great hope in.
It's great to see all of you guys involved in emerging market regions, and thanks for your comments.
Thank you.